Hi, this is Ken Boyd. I'd like to first introduce accountinged.com, my new site, which is an online academy that teaches accounting along with blogs, podcasts, small group discussions, videos, everything. And I would like to mention it because you can take a free trial, as you see up here in the corner. So I'd like you to try it. I hope it's a good way to learn more about accounting. My topic today, as I take this to be full screen, is errors, accounting changes, and lawsuits. So first of all, let's define what a class action lawsuit is. It's a large group of people with a common interest in a matter to sue or to be sued, the defendant in a suit, as a group. So these people have some sort of common interest, which is the key word here. Now, how does that relate to accounting? Well, you can have an accounting issue that can cause an unexpectedly large drop in a stock price. Restatement is a reason why a stock price might drop sometimes pretty substantially. And the big issue is it's unexpected. It may be an indication of poor management. People may even suspect that there's something illegal or something that a regulator might have a problem with that's going on. Creates a lot of bells, a lot of red flags, a lot of warning bells. So a restatement of the financials can cause an unexpected drop in the stock price. And if that unexpected drop happens, a group of people who own the stock, who have suffered because the stock price has gone down, may have that as a common interest and sue management for basically not doing their job and running the company the way they should. So let's talk about restatements for a minute. There's two big ones that I discuss in a blog that I'm going to go to in just a minute. The first one is correction of an error. So if there's an error in the financial statements, and what we're talking about is an error that you find in year two, you find it in year two, it applies to year one. Common sense says you've got to go back and correct the year one records because you can't have accounting statements out, financial statements out there that are knowingly incorrect. Another one, though, is a change in accounting method. And one of the most common accounting methods is inventory valuation. How do we value inventory for the purpose of recording a sale? Let's say, for example, that we change the inventory valuation method from FIFO to LIFO, from first in, first out to last in, first out. Well, there's a problem, and the problem is that the financials will not be comparable. We won't be able to make an apples to apples comparison. If we use FIFO, the oldest goods, which are probably cheapest, are sold first. If we use LIFO with an L, the newest goods, which are probably the more expensive ones, are sold first. That's not an apples to apples comparison. So the way we address that is we must restate the prior year as if the change happened in that prior year, because it makes the financial statements comparable. So if it's year one and year two, for example, and in year two we change to LIFO, we need to restate year one so that year one and year two are shown using LIFO, and we also need to show the financial statement reader the financial impact, the impact to net income of that change. So if I jump over to my blog here, this is Accounting Accidentally, I looked at a series of accounting related class action cases, and what I found out is that from Cornerstone Research, who did some great work on class action lawsuits, that the two big restating the financial issues were the correction of an error and a change in accounting method. And as I say here, you can't make an apples to apples comparison. You need to look at how that affects net income. And I further mentioned that we must restate the financials to reflect the new inventory valuation method. Getting back to what these shareholders think, says in this paragraph, which is an important one, the main reason for accounting-related suits is a price decline after a restatement. Essentially, the stockholders believe they've been harmed by management's misstatement and the resulting price decline after the restatement. Another topic that was not in my PowerPoint was weaknesses in internal controls. 60% of the companies in the study alleged an internal control weakness. And remember that internal controls are put in place for two broad reasons. The first is to segregate duties and prevent theft, protect our assets from theft. And the second is we want to make sure the financial statements are materially correct. Remember that Sarbanes-Oxley has really raised the bar on management's responsibility for internal control. And specifically, if you manage a publicly traded company, you are required to create a management letter that says you have reviewed internal controls in the last 90 days, whether there are any control weaknesses or whether you found any fraud, and you actually have to sign that letter if you're the CEO or the CFO of the company. So the bar has been very much raised on internal control compliance and the creation of internal controls by senior management. Another issue that causes these restatements that can cause upset shareholders is a write-down. Impairment means that a value of an asset is in permanently decline. And if the value of an asset is permanently declined, accounting rules say that we need to expense whatever amount, fraction of the value of that asset doesn't exist anymore. We need to expense it. We call that a write-down. And as a result, as I say in this paragraph, the write-down reduces the asset's value and increases expenses. So it's a cautionary tale that you've got to have controls in place to prevent those accounting errors from happening, because you don't want to have to deal with the restatement where you correct an error. It really damages management's view in the eyes of the public and the shareholders. And you also have to be very careful about a change in management. So as we wrap up here, I'd again encourage you to go out to accountinged.com. This happens to be the homepage. We have dozens of hours of accounting video training. I'm very proud of the site. You'll see more video training going up all the time. In addition to all my social media, you'll see links here at the bottom. So I hope that you'll consider the site, and thanks very much for watching.